Hey guys, just want to make a quick update. I made a few new charts on the website that I found quite interesting. It doesn't have all the data, but it's still pretty useful, I think. So here we have the Aave USDT lending yield, right? So what is Aave? Aave is basically just like a bank, a crypto bank. So you like deposit money inside, and then because you're depositing money, people could borrow money from that. And since they're borrowing from you, they pay you interest. So it's like a bank, except you're the bank, right? In a bank, they have like a lot of people's money and then they lend out the money to other people for interest. Here, it's the same thing, but when you put your money in, um, people can borrow that money for yield, right? So it's like a crypto bank, but it's decentralized because everyone is the bank. It's not just one centralized thing. Yeah, so I'm not affiliated with Aave. I have no stake in it, but I think it's quite interesting in how it approaches things because you do get to see the interest rates since it's decentralized and all the data is out online. What I was interested in was knowing whether or not the yield actually corresponds to market movements. And Aave is quite new, so you can see the data only goes back to like 2022. But there are quite some interesting things here. So when you look at just the law lending, the way this works is the more people borrow money, the higher the interest rates become because now there's less money for people to borrow. So there's like this curve wherein the more people are borrowing, the higher the interest rate will be to disincentivize people from borrowing all the money. But some people might want to keep borrowing money even at higher interest rates, which drives interest rates even higher, right? And there's also like liquidations. If people get liquidated, that money is paid back to like the lenders. So sometimes there are spikes in the interest rates because the people that are supplying money get a lot of money because people are borrowing a lot or getting liquidated a lot. Right. So basically that's the entire principle of it. So you can see here there are like spikes in interest rates where, oh yeah, people are getting super greedy or like borrowing a lot of money in Aave, and that affects the interest rates. This doesn't show much, but if we put a smoothing thing on this, so like here you have a 30-day smoothing average. Um, this actually is quite interesting now. So for example, these stops, these like large kind of tops, actually corresponds to small trend reversals. So for example, this stop had a Bitcoin price at 64K, then it went sideways, but it went all the way down sort of to 54K, right? And also this stop was at 93K, then it fell all the way down to 80K, right? So when the interest rates are spiking, it kind of corresponds to sort of local tops. And I mean, it doesn't always happen. So for example, this had a spike. Um, it was going down a little bit, but yeah, it doesn't always happen. But it's interesting because when more people are borrowing, that just means either people are greedy or people are getting liquidated, and usually that like corresponds to things happening in the market, right? So our last one actually at 80K had this spike, and we ended up falling down to 60K, right? So I just found that interesting. Yeah, so this chart is available in the website. If you guys want to see these charts, I put it down. Creating an account is completely free. Yeah, I'm gonna add more charts to this. And yeah, if you guys like data and data-driven insights on the market, like and follow me, and I'll see you guys next time.